Good afternoon. This is Bob Iacino along with Mike Arnold from Path Trading Partners, and this is a weekend update covering the futures market. It is July 1st. This will be covering the futures market starting the evening of July 2nd. Don't forget there is the 4th of July holiday in the U.S. on Tuesday. Futures markets are closing early on Monday, and they will be closed for open outcry on Tuesday, so open outcry options will be closed. But I believe the electronic systems will be trading. Things will be very slow and very choppy. There will not be a lot of liquidity in the futures. Let's take a look at what happened last week. Just a general review. In global macro news, global central bankers are singing a more hawkish tune in general. We had comments from Mario Draghi talking about hiking rates. He spoke last Tuesday at a gathering of central bankers in Portugal and was suggesting the ECB is considering curbing its asset buying program, which essentially is a tacit rate rise. But later in the week, the ECB kind of pushed back on that interpretation. They basically said that the Central Bank of the EU wanted to remain accommodative, and that accommodation would actually increase if the economy got better and they didn't raise rates along with it. That would make the level of accommodation higher. So they wanted to raise rates slowly with the markets to keep accommodation the same. They didn't really give any sort of guidance as to what levels of growth that would be. The markets didn't really believe it. The euro rose sharply, except for Friday when it sold off a little bit. You also had Bank of England Governor Mark Carney, after saying only a week ago that now's not the time to raise interest rates, he reversed course and said that the Monetary Policy Committee will debate a rate move in the next few months. Not to be outdone, Janet Yellen and Fed Vice Chair Stanley Fischer both voiced concerns that equity and other asset valuations are on the rich side now. Also, Canadian Central Bank Governor Stephen Poloz also said that rates might need to go higher if the economy continues to move the way that it is. Now, inflation pressure still seemed quiet, except maybe in the United Kingdom, who had a 2.9% inflation rate, but that also has a lot to do with the weakness in the pound. Eurozone inflation came out on Friday and showed that their CPI rose only 1.3% in June versus a year ago, and that was down from 1.4%, although it was higher than what was expected. 1.2% is what the expectation was. Now, adding to that hawkish tone, U.S. growth was revised higher for the beginning of the year. Gross domestic product in the U.S. expanded actually at a 1.4% annual rate. That's the final in the third quarter, and that comes from the U.S. Bureau of Economic Analysis. That's up from the 1.2% reading in the last revision. It seems there was improved consumer spending. The initial first quarter reading that came out last April was 0.7, so it's doubled since the initial reading. Eurozone confidence is at nearly a 10-year high. The ESI, Economic Sentiment Indicator, jumped to 111.1 in June from 109.2 in May. Again, more hawkish for the central banks, more strength in the economy. Now, this is the highest since August of 2007, when the Economic Sentiment Indicator reached 111.8. Not a lot of movement on the ACA, the American Health Care Act, being pushed by Republican senators and the Trump administration. Vote's been pushed back to after July 4th. They should have voted. Again, there seems to be some dissent within the Republican Party as to whether this particular version is going to pass. We did have the Supreme Court allow the main points of the Donald Trump travel ban. So that happened last week. That was a 9-0 vote. President took a victory lap on that on Twitter. In terms of what's coming out next week, just going to focus on some of the biggest things here. Starting with Sunday, July 2nd, we've got Japan's assortment of Tankan Index. We've got the large manufacturers outlook, the large manufacturers index, the non-manufacturing index. We've got the large all-industry cap X, all coming out at 6:50 on Sunday, July 2nd. Again, that's Central Time. Estimates are as follows. Tankan, large manufacturing index for the second quarter, forecast of 15 versus 12 last. Large manufacturers outlook, 14 versus 11 last. Non-manufacturing index, 23 versus 20 last. Large all industry CapEx 7.2% versus 0.6 last. At 8:45 p.m. Central Time, we've got China's Caixin PMI for manufacturing expected to come out at 49.8 versus 49.6 last. Moving on to Monday, July 3rd. Remember, early close on the open outcry future, so the options will be slow and volumes will be light. Midnight, we've got Japanese Consumer Confidence Index for June, expected to be at 43.9 versus 43.6 last. We've got the Purchasing Managers Index for Switzerland, along with their retail sales number. No estimate on the year-over-year retail sales. It was down 1.2 last. Purchasing Managers Index for Switzerland expected to come out at 56.3 versus 55.6. That'll happen at 2:15 a.m. and 2:30 a.m. UK's market PMI for manufacturing for the month of June comes out at 3:30 a.m., 56.3 expected versus 56.7 last. 4 a.m., Eurozone unemployment rate, 9.3% versus 9.3%. We're getting into the beginning of the month unemployment rates now. Then at 7 a.m., we've got the Bank of England Governor Mark Carney providing an update on his Federation of Small Business work. 9 a.m., U.S. ISM manufacturing for June, along with the prices paid and the unemployment. That's all at 9 a.m. Same thing at 9 a.m. in the U.S. is construction spending. The estimates are as follow. The headline ISM manufacturing number expected to be at 55 versus 54.9 last. Prices paid expected to be at 58.5 versus 60.5 last. And the ISM employment rate, I've got no estimate on that one. Construction spending month over month expected to be up 0.2% versus down 1.4% last. Then at 6:50, Japanese monetary base year over year, that's 6:50 p.m., expected to have expanded at a 19.2% rate versus 19.4 last. And then just before midnight, 11:30, we've got the Reserve Bank of Australia's rate decision. It's expected to keep rates at 1.5%. That would be unchanged. Tuesday, July 4th, U.S. markets closed, but we do still have some overseas things going on. UK market construction PMI for June expected to be 55 versus 56 last. That's at 3:30 in the morning. 8:30 in the morning, market Canadian manufacturing PMI expected to be 55.1, which would be unchanged. Getting into the evening then, we've got the composite PMI and the services PMI from Caixin for China. And we've got the Japanese Nikkei PMI for composite and services. The Japanese number coming out at 6:30 and 7:30 respectively. Chinese number coming out at 8:45 p.m. No estimates on any of that. Moving on to Wednesday, U.S. markets open again, 3:30 in the morning. UK services PMI for market expected at 53.5 versus 53.8 last. And the composite PMI expected at 53.9 versus 54 last. Unit labor costs year over year for the UK also coming out 3:30 a.m. No estimate on that one. 4 a.m. Eurozone retail sales year over year for May expected at 2.3% versus 2.5% last. 9 a.m. U.S. factory orders for May expected to be down 0.5%. We've also got durable goods coming out at the same time for May. No estimate on that. Last was down 1.1. And then at 1 p.m., the FOMC meeting minutes from the June 14th meeting. So that will be very important. Getting into the evening, 6:50, Japanese buying of foreign bonds and foreign stocks will be released. No estimate on that. We've also got at 8:30 p.m., Australian trade balance in Australian dollars expected to be 1.1 million versus 555 million last. That's in Aussie dollars. Thursday, July 6th, 1 a.m., German factory orders year over year for May expected to be at 4.5% versus 3.5% last. 2:15 a.m., Swiss Consumer Price Index year over year expected to be up 0.3 versus up 0.5 last. Then you've got a slew of market numbers. Germany's construction PMI, Germany's retail PMI from market. No estimates on either one of those. Last on the construction PMI was 55.3 and the retail PMI was 55. Again, those are both German numbers, 2:30 a.m. and 3:10 a.m. on those numbers. Getting into 6:30 a.m., we've got the ECB account of the monetary policy meeting, so those minutes will be released. 7:15 a.m. ADP employment change for June expected to be up 180,000 jobs versus up 253 last. 7:30 Canadian building permits month over month for May, no estimate. Also at 7:30 initial jobless claims and continuing claims for the week of July 11th and for June 24th, rolling period on the continuing claims. 243,000 expected on the initial jobless claims. We've also got U.S. trade balance coming out for May, expected to be down 46.3 billion versus down 47.6 billion last. We've got the Department of Energy U.S. crude oil inventories for June 30th coming out one day later. They'll come out on Thursday at the normal time. 6:30 AIG Performance Construction Index for June for Australia. No estimate on that one. And then at 7 p.m. Central Time, Japanese labor cash earnings year over year and real cash earnings year over year. Labor cash earnings expected to be up 0.4 versus 0.5 last. Real cash earnings expected to be down 0.1%. Finally, on Friday, the big day, we've got a holiday this week, and then we've got non-farm payrolls on Friday. So the rest of the week, while there is some important stuff going on, Friday's really the big day. At midnight, leading index for Japan for May and the coincidence index for Japan for May. Again, that's all at midnight. Leading index 104.6 versus 104.2 last. Coincident index 115.5 versus 117.1 last. 12:45 a.m. Swiss unemployment rate expected to be at 3% versus 3.1 last. Unemployment rate seasonally adjusted expected to be 3.2 versus 3.2 last. 1 a.m. German industrial production non-seasonally adjusted year over year expected to be up 4% for May versus 2.9% last. 3:30 a.m. UK industrial production year over year, manufacturing production year over year, construction output year over year, visible trade balance in pounds, visible balance non-EU in pounds, and total trade balance in pounds. That's all at 3:30 a.m. Central Time. I'm going to list the estimates. Industrial production, again, this is the UK, up 0.2% versus down 0.8 last. Manufacturing production year over year, up 0.9% versus unchanged last. Construction output year over year up 1.1 versus down 0.6 last. Visible trade balance in pounds. No estimates on the trade balance numbers. Moving down the list to what's going to be the biggest market movers for the week. 7 a.m., an estimate of UK gross domestic product for June. Then at 7:30, you've got Canadian unemployment rates and the net change in employment. I have no estimates on those. Also, you've got the U.S. change in non-farm payrolls expected to be up 173,000. And you've got the unemployment rate expected to be unchanged at 4.3. Was up 147,000 last, and again, 4.3 last on the unemployment rate. We've also got average hourly earnings year over year, expected to be 2.6% up versus 2.5 last. Average hourly work week expected to be unchanged at 34.4. And then on top of all that, at 10 a.m., U.S. Fed is releasing a 2017 monetary policy report to Congress at 10 a.m. We don't know if we'll get any releases from that or not. And then at noon, U.S. Baker Hughes rig counts. As always, we had a rig count rise of 1 last week for a 24th consecutive week of rig rises, but we only had one additional oil rig last week. So that's kind of important to watch it this week to see if we're starting to get a decline, as crude oil was very strong. All three indices ended up down on the week. Crude oil ended up on the week for the first time in 6. That's all I have for you guys. Mike, let me turn it over to you.
Thank you very much, Bob. So, wrapping up the VIX for the week, closing out the week at 1118, but it was a pretty wide range week. We got up to high of 1516 and lows down around 968. Very big range in the VIX, but not closing with a lot of fear. Still above 11, but nothing much to report there. Switching over to the futures. The Dow mini futures, which we've been caught in this range now for a couple weeks. we're still basing above the 25% key GAN level. We dipped below it, but then closed back up right at the key levels, and Friday was an inside day. So if we do get out of this range, light trading on Monday, nothing much on Tuesday. So what we're going to be watching for is if we can get above Thursday's high, which is 21,451. We'll be watching for 21,494. Then once we get above that, 21,546. We have a new defining point to the downside for our trend line, 21,138. If we do get below that, we'll be expecting a test of right around the 50-period exponential moving average, 21,076, but that's going to slightly move up. So if it takes a couple days before us to get down here, that's going to keep rising, and it could line up in conjunction with the 21,110, 37.5% GAN levels. So those are really the key areas we'll be watching in the Dow mini futures. Switching over to the S&P mini futures. Also an inside day. This market holding above the 37.5% GAN level, so not quite as strong as the Dow futures, but still decent holding power. What's interesting now is we potentially, if it does go lower, we'll get a first cross of rotation zone, which will provide resistance. If it does rally, these moving averages should just flatten out, and we'll see what happens, but that could be, again, support. Key areas on this market. We're going to be watching for a retest the upside if we do rally of about 2,438. Once we get above there, key area now is this new defining point, 2,445. And once we get a close above that, we're watching for a retest of the high areas. Key resistance is going to come in at 2,448, and then we'll watch for retest of the 2,451.50 area. If we break down, very strong support area about 2,415 to 2,413, right in there. If it manages to get below that, then we're going to watch for a retest of the flattening 50, 2,408, and the new defining point on the trend line, which comes in at 2,402.25, which is also the prior breakout level. That's going to be a very key level. Over to the NASDAQ. So far you can see based off where we are, this one on the longer term is holding right above the 50%, and on the shorter GAN retracements holding just above the 75%. So NASDAQ has been the weakest of all the financial futures that we follow. Also an inside day. New defining point to the downside, we're still watching for we broke this prior trend line, which has now been redrawn, but we're still watching for an end of this clear path move, which comes in at about 55.79. So if we sell off, first key support is this new defining point, which is 56.01. If we get below that 56.01, we're watching for 55.79. Then we'll be watching for about the 55.50. On a rally, very strong resistance coming in at 56.80 to about 56.85. If we do rally through there, we could see a return. We have the first cross of the moving averages. So now we have a strong resistance zones coming in about 57.18 to 57.39 with a GAN level at 57.29. So that's going to be key resistance to the upside. And if that is broken, we're going to be watching for a return to 57.68 area. Switching over to crude oil. Crude. Let's see, 1, 2, 3, 4, 5, 6, 7 day rally in crude oil. Getting to the end of the clear path, we said with this break of the trend line, which is not a redraw yet, we watched for a retest of the upper end of the rotation zone, and then the clear path move, which was 45.95. It's reaching up here, didn't quite get to our 46.42 GAN level. On a continued rally, next level up, 46.92 to 47.07 is going to be very key over the next few days. If we do pull back, strong support coming in, 45.20 to 45.10, and then you could dip to 44.96. Just want to switch over to the weekly chart to also put this in perspective. on a weekly chart. You can see with this move, we've only returned to the bottom of the declining rotation zone and a prior breakout level on the weekly. So this is going to be very strong support. Very strong resistance coming into this 4640 to 42 to 4650 area. And on a weekly basis, if we do get back through that, the next major target higher is the 47 about 89 level on a much bigger time frame. Switching over to copper, which we haven't looked at in a bit, it finally got out of a range that we were watching at. Now we'll be watching, it did hit the end of this clear path, simple clear path. Now we're watching for the end of the clear path, so very key level coming up. Continued rally, we're watching for 273.09 area for taking any profits on longs. And then there's going to be some more resistance coming in about 273.77 to 274.14. If we do get above that eventually, then we'll be watching for a run up to the 277.84 to 278.47. On a pullback, it's going to be strong support coming in at 267.71. Then we could possibly drop back down to about the 266.21 to 265.92 area. We also have the rising 8 coming in. The moving averages are separated, which will provide some support should we come back down. Would not be surprised to see another swing coming in before another major push higher. So a pullback, then another push higher. Looking at gold. Gold coming down, testing this 200 area, about the 1239 level. If we do get below that, we'll be watching for a retest of the defining point coming in at 1236.50, very key. If we do get a close below that, we could see a possible return eventually down to about this 1219 area, end of this clear path. We have first cross rotation zone providing overhead resistance. You can see how he ran up, hit the 8 right there, and we've had resistance in the declining rotation zone. So on any rally, major resistance coming in about 1247 to 1248. If we do get through that, then we'll be watching for about the 1253.50 level to 1255 for very key resistance. Again, we get a close below the 1236.50 area or a sustained move intraday. Next key area down about the 1233.5. Then we don't have much until the 1225. And eventually then we can see, as I said earlier, a return to the 1219 to 20 area. Finally, to wrap up this weekend review, let's take a look at silver. See what silver did. Silver, we have a new defining point to the upside right by our significant level, which we're looking at 1691.50. We get a move up there. We first have to get through the 1678 level where we have the overhead 21. If we do get a move above that 1691, 1690 area, we'll be watching for a return to the $17 mark. And then we're also into this clear path with targets right around the 1716 and this declining trend line. If we do get below key support at Friday's lows, 1650, we'll be watching for 1642 to 1638 as the next key area support. And then once that's broken, right down to about the 1625 area. That wraps us up for the weekend review. I'm turning it back over to you, Bob.
Thanks for that, Michael, and thank you guys. Don't forget, a new MoneyPat podcast is out. You can get it on our website, Pat Trading Partners, or at iTunes or Google Play by typing in the MoneyPat podcast. Hit like and subscribe if you like what we're doing, and we will talk to you in the next Pat Chat. Cheers, everybody.